Good morning and welcome to the market forecast. Today is Wednesday, July the 28th. I'm John Hoagland. As always, I appreciate you being here and trusting me with your time. We're going to be looking at these markets, seeking accurate context, good risk management, and always trying to remain patient. Good morning, everyone. Today's the day. As far as economic news releases are concerned, 7:30 this morning, the trade balance came out. 9:30, the EIA petroleum status report due out. 1 o'clock, the FOMC announcement. And 1:30, the Chairman Powell's press conference. All of those, of course, quoted in Central Time. Today is the day we've been waiting for all week. The Fed is going to update on any changes in policy. Not expecting any change in interest rates, but there will be a lot of speculation and investigation into the language that they're using, especially in the press conference after the release about timing of repurchasing. I want to remind everybody to manage your expectations today. Manage your expectations. Likely, to be some muted activity. We're going to take a look at the chart, see what we did yesterday, see what it looks like today. But just manage your expectations. There's probably some charged emotions. Everybody waiting for this FOMC meeting. Everybody looking to take some money out of the markets when that happens. Just remember, anything can and usually will happen. As far as earnings are concerned, Shopify, McDonald's, and Bristol Myers are already out this morning. There's an awful lot of green on the board. It looks like our earnings are overwhelmingly positive. Later on this afternoon, we're looking at Facebook, PayPal, and Ford, to name just a few. It's a pretty thick, pretty long list of earnings due out today. Crude balancing after kind of a surprise API 4.7 million barrel draw in crude inventories here in the U.S. The EIA expecting a draw, not as deep, but minus 2.9 million barrel draw today. So the market really kind of remaining a little bit range bound and not really doing much. We're going to, again, take a look at that. It appears as though the opening range has been left at the low of the session, which can be an indication of early buyers in the market. There's no gap, but we'll check that out on the charts shortly. Make sure you smash that lucky like button. Share, comment, question, feedback, and heckling are always welcome here. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. Today is Wednesday. It is the day that we do the group coaching session. I'm going to drop the link in if you haven't already signed up. Plenty of seats. We'll look forward to seeing you there, of course. Now, that starts typically at 1 p.m., just about the same time the FOMC announcement is going to come out. So we're going to start that session today at about 1:05. We'll take a look and see what happens after the FOMC release. If there's any activity during the coaching session, of course, we can take a look and see as Chairman Powell goes through his press conference. But again, we'll start that session about 1:05 today due to the FOMC release. Here's that link. Go ahead and sign up. I'll look forward to seeing you there. I've got a couple of good emailed in questions. And of course, we'll be taking questions throughout the session. So, taking a look earlier here, just a few minutes ago at the VIX, it was down about 3% at 1875. That's down 3% from the close yesterday. Dollar index still hanging in there, largely flat at 92.65, and the 10-year yield up slightly. I remember yesterday it was 1.25%. Today it's 1.26% last I checked. So, again, a reminder, stay patient, manage your expectations, take what the market gives us. Let's jump into the charts. All right, let's start here with the daily in the crude. I got the 30 up, but we don't like to start with the daily. We always like to start our analysis from the top down, from the longer time frame down to the shorter time frame. What are we looking at? Well, we're looking at a market that has largely fallen into balance, and it seems to be poised for change. We've seen some pretty decent increase in open interest over the past few sessions with very little price action. All eyes, of course, are going to still be on the EIA and, of course, the FOMC. But when you look at this market and the daily time frame, it seems to be ready for the next volley, if you will. If this were a half of a tennis court, okay, and Price is the tennis player always likes to go back to the center of the court so that he's in the best or in the best location to respond to the next volley back his way. If the next volley is this way, he's good. If the next volley is this way, he's good. So the market really kind of centrally located in the recent range. No real obvious market state other than range bound for the past few sessions here. Take a look at the 30 minute here. So largely short time frame controlled and balanced. Look at the balance that we've been in. Well, we're not even going to call that a balance, but the last 3 days, the last 3 sessions, not including today, we've just largely stayed pretty close to the bone here. We took a look at the upper extreme of the area of balance last night, found rejection. Yesterday, we took a look down near the low of this area of balance and found rejection. The market just continues to volley back and forth. Settlement in the crude oil contract is 71.65. Put that on your charts. If there is an overnight inventory, I would say it might be slightly to the long side. Again, we added 6,900 in open interest to the downside yesterday. Now, what did we do? Did we get our traders a little bit too short in the hole here? And now we're kind of headed the other way. It looks like we're basically no gap. Looks like we're above value. One of the things I'll be looking for is to see if we reject value from yesterday. We've got last week's high right in the neighborhood here, right about where we're trading right now. This is an opportunity, I think, to try and stay patient. What I'll be watching again for today is if we accept back in value from yesterday, I'll look for the market to start to look down towards the bottom end of the balance area. If we cannot accept inside value from yesterday, that's going to tell me that there may be some buyers holding price up, and if we can get the short time frame traders too short, that might bring us to another test of last week's high here, and a potential move. I think that there is a move brewing. We've seen open interest increasing over the last few sessions, just no directional activity. A lot of markets focusing on FOMC and, of course, crude focusing on the EIA here at 9:30. Taking a look at the S&Ps now. Okay, we have a drop in open interest on a down day, indicating possible long liquidation, perhaps some posturing for protecting ourselves from what might come out today, what might not come out today. There could be some fireworks today. It could be a non-event. We don't know. So we're on an inside extended trading hour range. We haven't lapped out either side of yesterday's extended trading hours, which leads me to believe that I think it might be in our equities more of a hurry up and wait type of situation. I'm not going to be participating in the FOMC release. I may respond to it afterwards, and I'll look for opportunities to take some profits today. But I'm not expecting any big moves. That move yesterday was foretold, I guess. If you look at the opening range, it was the dead ass high yesterday, and we took this market a little bit lower. I don't think we broke any structure. I don't think we did any damage. I think we're again positioning ourselves for today. Take a look at the 30. Okay. Hang on a second. Let's make this big so everybody can see it. So yesterday, we had the opening range at the high of the session. We had put in the all-time high here Okay, in the extended trading hour session, usually the markets don't like to leave that, and it's probably not going to remain the high for very long. We found some sellers yesterday. We cleaned up a little bit of unfinished business. We came down. We rechecked this point of control, this naked point of control that was right in this gap. So this was a double check. We tested down below it. We recovered settlement 43.94.50. No real overnight inventory. This is kind of like crude oil because I'm going to be looking for evidence that the market is rejecting value from yesterday. Acceptance may bring us back down to an opportunity to look for a chance to buy at cheaper levels. And so if we're not open yet, we open outside of value. I'm going to be looking for a reacceptance of value from yesterday or a rejection of value from yesterday. Opening outside of value, I'll probably be keeping a pretty close eye on that opening range, that first minute. Yesterday, that opening range, if we just took the short below the opening range, we had a really nice opportunity for profit. If the opening range is the low of the session today, then we may see buyers coming back into this market. I'm not really, again, expecting much. I mentioned on the opening here to manage expectations. You get a good trade on. The fact that there is news coming out at 1 o'clock could change the market drastically. Be reasonable in your expectations and in your profit targets today. Yeah, it could provide a big opportunity, but until that comes out, I'm going to be kind of thinking that it's going to be a lot of hurry up and wait. Let's take a look now into the NASDAQ. Boy, I'm sure glad I got everything right today. That was funny yesterday. I started the wrong stream. You got halfway through this and realized I wasn't even on. Okay, NASDAQ. A little deeper cut than the S&Ps yesterday. We traded actually pretty close to almost a direct hit on weekly kickoff low here in the NASDAQ, which was 14,766. The low yesterday, 14,774 and a quarter. So pretty close to a direct hit on that before buyers came back in and recovered part of the losses from yesterday. We added 3,200 in open interest, so less of a long liquidation or profit-taking event, and maybe even some sellers coming into this market on the sell side. Tech earnings are stellar. I don't see any reason why this all can't be recovered, barring new events and new news. Again, we have an inside trading hour, extended trading hour range from yesterday. Might be another hurry up and wait type of session, another opportunity for us to be patient, wait for the right opportunity. And we're always working on doing that. So here's the gap fill that we went through yesterday. Here's the point of control that we went through yesterday, another naked point of control, largely the weekly kickoff low before finding some buyers. If we're holding any longs, I'd have to say that if we're holding any positions, I should say, I'd have to say that they may be slightly long. Settlement 14,947.75. Put that on your chart, 14,947.75. It looks like we're going to open above values. So a very similar situation to the S&Ps. If we reject value from yesterday, we might look for the opportunity for this market to continue to ratchet higher. But again, with FOMC, I'm not looking for anything huge as far as big price action or big moves until after the FOMC meeting information comes out. So again, are we going to accept or are we going to reject value from yesterday? Taking a look now into the gold market. Balance remains. Indecision remains. Lots of long shadows over the last 3-4 weeks here. This market is really just waiting for information and looking for an impetus for the next move. We lost 16,000 in open interest yesterday. That's a little bit rollover related. I'm still looking at the August contract. Tomorrow, 100% sure we'll be trading the December contract. I looked at the volume. Volume was still a little bit higher in the August contract. There's about 100,000 more contracts of open interest still in the August contract. Tomorrow we'll be looking at December. Short time frame control is what this market says to me, is what this chart says to me. Yesterday, we're really defined areas of rejection up here and rejection down here. We're taking another look down to this area of rejection at the low, weekly kickoff low, 1791. We took a look down below it last week. We rejected it. Rejection, 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 rejection. Are we really that big of buyers down here? Or is there a chance that we might exhaust those buyers? There's always that possibility. Are we that good? Are we that big of sellers up here? Are we going to exhaust those? It's always a distinct possibility. But again, because we are range bound, I'm going to be looking for opportunities at the extremes in large part. This move down here was a pretty decent opportunity for us to look at a potential long along these lows here. If that long continues, well, you can get a good trade out of that. But I'm not really that interested in anything in the middle of this range. 4 or 5 days, it's been just a short time frame controlled random walk. So I'm going to be very patient today if I'm going to be trading gold. Euro is about the same situation. We've got a lot of indecision over the last couple of weeks, a lot of long shadows on these bars. We lost 1,000 in open interest yesterday. No big deal. The market seems to be really enveloped by last week's range. We looked above it yesterday. We couldn't accept above it. We looked at it last night. It remained resistant. This is a short time frame controlled market. Of course, any and all markets can be responsive to the information due out at 1 o'clock today. So again, this may be another sit and wait opportunity for us to just observe, wait for the right trade to come your way. We've got the market really rejecting yesterday's value. There are a couple of good kind of visual levels down below. If this market continues to move lower, this naked point of control is an obvious target, and then last week's low is just below that. So a target-rich environment down here, rejecting range and value as we speak. Our overnight low is really the regular trading hour session low, and we are pressing it right now. But again, we're so range-bound here and in such short time frame control on a day that with an important release coming out, manage your expectations. And last but not least, the 10-year. Again, balance remains. Lots of indecision here. Makes sense. This is going to be a pretty important FOMC meeting. Could be, or again, could be a non-event. Inside extended trading hours again. So yesterday's range outside our extended trading hour range so far today. FOMC again, it's a hurry up and wait type of situation. If there is a change before that, we're going to have to be nimble and creative and accept information for what it is. We're trading what we're seeing today. If I had to say that this is another kind of hurry up and wait type of market, I'm going to say yes, it is. 30-minute. Okay. Overnight shorts. Settlements all the way up here, 134 and 30 seconds, about halfway. Really kind of rejecting yesterday's range. test of the previous day's point of control. Below that, we have a previous weekly kickoff level that was extremely magnetic for the better part of last week. So there's definitely some targets down below, and then last week's low down below that. So there's definitely some targets and some potential opportunities for execution. But again, looking at the range that we're in here, I'm going to really be trying to focus on the extremes of the ranges. For bigger opportunities, you find some smaller time frame opportunities. Go for it, but make sure that you don't put yourself in a situation where you're not available to participate after the FOMC meeting information comes out and during the press conference. That's we did that in good time today. Again, I apologize for the technical difficulty yesterday. As always, I'm human, and there's nothing perfect in futures trading. So we'll take our last look at the comments here. I didn't say hello to everybody this morning, did I? Ed Nelson, first in the room, you win the prize. JB, James, Jorg, the best trader community, and it's because you guys make it that way. Bill, Brian, Jim, Tone, Polymath X. Good morning, everyone. Good luck. The bear ate my lunch yesterday. Sorry to hear that, Polymax, but today's another day. Ravenwise, good morning. Brett, good morning. Caesar, Jerry is awake. Stacking bananas, good morning. Greg H. Zerain, John. Murph, good morning. Drones over Texas, good morning. George, Vince, good to see you this morning. Jason, Harry Gordon, good to see you. Fred, I'm going to email a question. Good. Angela, Ophelia, I want the situation of the stock market now. Ophelia, this is the first time I've seen your name. Welcome to the Market Forecast if this is your first trip to it. We're glad that you're here, and thanks for commenting. Question email sent. Excellent. Scott Matheson, Jacob, Theo, good morning. Arabia, good morning. I appreciate that, Fred. That's the goal, is to get a little bit of context and some ideas for potential opportunities for us. Thank you for another great market. My drones, my pleasure. George, Jorg, you are the head. I appreciate that. Sometimes I think I'm crazy, but I'd have to be, because after all, I am a futures trader. Sean, always love these pep talks. Ready to take on the markets. Good. Simon, thank you. And Joe the Future Scalper, thank you, from Austin, Texas. A few new names there. Thanks for chiming in and letting me know you're there and saying hello. You guys make my day every day. And being Wednesday, this is my favorite day of the week, because we are going to be again having the group coaching session on, and again at 1:05. All right. Think about your plan today. Think about sticking to that plan. Take your deep breath. Remain humble, grateful, and creative in your trading today. Looking forward to seeing you at group coaching on Wednesday. Dan's looking forward to seeing you for the market recap at 3 o'clock Central Time today. And other than that, I'll see you tomorrow morning. Trade well today. Be patient. Manage your expectations. And see what the market gives you. Trade well.